So I'll start by introducing myself to anybody who doesn't know me. I'm the CEO and founder of ExeQution Analytics. So ExeQution Analytics is a boutique analytics consultancy, and we exist to help financial organizations and trading organizations in particular do more with data and do more with technology. So if you think of trading there are basically three corners to trading. You have your traders yourselves who obviously get very excited about things. We have our quant teams and our tech teams. And at ExeQution Analytics, we position ourselves at the intersection of those three pillars of trading. So I've been involved in KX for a ridiculously long time. And over the last 20 years, I've seen a huge amount of change to the ecosystem around KDB+. And over this, like when I started back in 2003, the first year Q was released. And if you went and you got your KDB license, you were looking at like a 1 to 2 year project before you got anything useful. And then over this time, KX released KX Platform and Insights Enterprise, Data Intellect released Torque, and this has streamlined the development of KDB+ infrastructures and allowed people to take advantage of, previous iterations and go to market much more quickly. So what ExeQution Analytics was founded to do was to take advantage of those infrastructure and focus on, now that I have this KDB platform and it's scalable and it's reliable and it's storing this vast amount of data, well, what am I going to do with that data? How do I get that data to actually transform my business and drive trading success? So KX is used for a multitude of challenges, and these are some of the use cases that we have approached. And the way that we approach these use cases is to create a structured analytics framework to focus on how we can get data out of KX and use it to answer some of these challenges. So quant research is the first one, and one that I'll dig into a bit today. Whether you're talking about portfolio optimization or alpha generation or price prediction models in the execution space, the challenge is usually the same. You have vast amounts of data, you want to backtest over a long period, and you want to be able to interface with languages that quants use. So when I started my career, that was MATLAB, but now it's much more likely to be R or Python that have AI and ML libraries. Intratrade monitoring is really important. So 20 years ago, traders, we valued things like gut instinct and feel, because traders were essentially trading blind. But nowadays, there's real-time data flowing and massive volumes of data driving decisions that move billions of dollars per second. So how do we transform the chaos of that data into something that's actually useful? How do we turn those data points and get them in front of the right people at the right time so that traders can actually make decisions that are improving their performance? Trading analytics is a huge area of innovation. So again, 20 years ago, we came up with the concept of a volume profile, and a VWAP algo would just go off and trade for the day. Nowadays, algos are much more dynamic, and that means that you need real-time analytics that are comparing the historical view of the market with the real-time view so that the algos can change their behavior appropriately. Backtesting is something that we hear about from our clients a lot. How do I ensure that the models I've spent all of this time developing remain efficient as market microstructures change? How do we close the circle on backtesting so that we understand that a model that was developed offline, when it's integrated into trading, that it still remains effective? Best execution is another one that has obviously evolved over the last 20 years. When I started, how we sold algos was, I have this quant and he's super, super smart, and he's way smarter than my competitor's quant. But I'm not going to explain to you the model that he's developing because, it's far too complex for anyone to understand. And that was, you just had to trust me that my model was better. So those days are way gone. And now it's all about transparency. It's about understanding the trading strategy and decomposing the performance of the trading strategy to actually understand what is contributing to the over or underperformance. And then finally, surveillance or compliance requires an understanding of all of those kind of bits and pieces that we've put together. You need to understand market data, you need to understand trading behavior, so you can identify what requires investigation and what does not. So I'm going to start with quant research. Well, I'm going to focus on quant research today. In the world of business and entrepreneurship, we have this idea that failing fast is good. You know, throw out the bad ideas, hone in on the good ideas, and that's how I'm going to make money. And the same is true for quant research. And this is where KDB can really come into its own because of its speed. It is the fastest time series database on the market. Why is speed important? Because the quant process is inherently iterative. So if you have come up with an idea that you want to test, and if it takes you 2 weeks to run your back test over the last 5 years, you kick that off and you'll go and you'll move on to something else. And then 2 weeks later, you'll come back and you'll evaluate your performance and go, yeah, that was okay. I like that. I'm going to put it into production. Now, if you can do that same back test in 12 hours, you can kick it off before you go home, come in the next day, evaluate and go, yeah, that was okay. But I have another idea. What if I do it this way? Will that make it better? So the speed of KDB is allowing us to pursue excellence. We don't have to settle with that's okay because the cost of excellence is so much cheaper for us because we can iterate so fast. That also, if you're a Q advocate, which I am a massive Q advocate, that speed also comes in time to market because Q is the most efficient language, in my opinion, anyway. But also the other area in which we like to improve the optimization of the quant process is in enabling quants to focus. So I've got a demo here that I'm going to run. It's got my audio on it, so I get to stop talking for a couple of minutes. But the idea here is to enable quants to focus on the purpose of their model and not get caught up in the inputs that go into it. So one of the common complaints that we hear from our clients is that quants spend 80% of their time on the acquisition and curation of data and not enough time using it. So what we wanted to do was create this structured analytics framework that allows quants to focus on the data points and how they use those data points rather than how they calculate it. So when we talk about AI these days, generative AI is kind of the buzz topic, and I will come to that later. But we've been using AI in trading for well over a decade. And typically that takes the form of structured or unstructured, like deep learning models. And there's so many of them, but the one thing that they all have in common is that they're only as good as the features that you put into them. So our structured analytics framework is designed to enable quants to focus on those features and to have options around what features they use without having to divert their focus on how to obtain those features.
In our demo today, we present a solution to improve efficiency of quantitative model development by handling venue-level specifics within the analytics layer, enabling analysts to focus on interpretation of results without wasting valuable time on data acquisition and curation. We're using a Python API called XQA, which is itself dependent on PyKX. We open a connection to our AWS server on which we have a KDB process listening on port 6007. Our historical database contains level 1, level 2, and level 3 data across all venues in Japan for a 2-month period. All the analytics that we run as part of this demo are calculating on the fly against this raw data set with no caching or pre-calculated metrics involved. We present metrics in terms of the time period that they are designed to query. So our first example, get daily metrics, returns 1 metric per symbol per date across the sim list that you have specified and the date range. And here I have a list of the metrics that I want to query. So you can see it takes less than a second to aggregate all of that raw data and return volume, turnover, auction volume, imbalance at level 1, the number of trades, the number of distinct prices, the high-low move on the day, and the average trade size for me to feed into the model that I am developing. So as I'm working through the results of my model, I might decide that there are a few extra features that I want to add. Maybe I can't decide whether I want spread in basis points or ticks, so let's just query both. And you can see that we have 2 extra columns returned now. We offer analysts the options to vary their analysis between individual venue or multi-venue through use of a single parameter. You can include or exclude specific date types like rebalance dates that might skew your analysis or futures expiry. You have the option to specify whether you want data to be corporate action adjusted or not, and even to specify the date at which you want the corporate action to be adjusted to. Our second example presents data in bins. And again, we specify a symbol, a list of columns, and a list of dates. But when we're requesting data in bins, you can see we default to 5-minute bins, but we offer a huge amount of flexibility here. Maybe you just want to query the first hour of the day. Maybe you want 30-minute bins. Maybe you want 30-second bins. Maybe you'd like your time zone to be something other than the local time zone of the stock because you want to aggregate across multiple venues. If you want to include or exclude auctions, you have an option for that. And you can even specify limits. So only include where the market price of trades was under 1,400 yen.
So the idea here is if I want to use spread in my model, I don't want to have to worry about the fact that Japan changed their tick size halfway through the year. I don't want to have to worry about figuring out which stock relates to which tick map. Everything should be done at the analytics framework. So as a user, I can retain my focus on how I'm using the data and continue to iterate through my model process so that I come up with the best model with the best predictive power. So once I have this model, it's fantastic, and I put it into our trading platform. And then one of the traders calls me up and he says, Kat, I found an example where the model didn't work. And this is something I've seen across my long experience working on trading desks. And it generally leads to a lot of frustration. And it's because traders and quants have very different perspectives. So quants work with probabilities, confidence intervals, and statistical significance. So they're trying to design a model that is going to work in the majority of cases. But no quant that I've ever met claims that their model works 100% of the time. So when a trader puts their hand up and says, well, I found the one example where it doesn't work, that generally doesn't end up in a communication that works very well. And this is where analytics come in and they can bridge the gap. They can translate between those two perspectives, because then you can use data to say, okay, yeah, you found an example that doesn't work. And we estimate that those market conditions come up about 2% of the time. So it's not worth our while trying to find a solution for it. We're going to continue to use the model because on average, it offers much improved performance. Or alternatively, yes, you found an example that doesn't work. There's a characteristic of that stock that we didn't take into account. It doesn't work for queuing stocks. So we'll turn it off for queuing stocks and we still get to take advantage of our quant model on the stocks that it does use. So here we have what I think is the optimal quant life cycle, and it's about using analytics to bridge every gap in the trading process. So we start with an idea, a hypothesis on how to make something better. We do our analysis on that and we iterate multiple times until we're happy that we've come up with the best model. We then integrate it into our trading system. And as part of that integration, we include metrics that are designed not just to test the predictive power of the model, but also how the trading system reacts. So you could have a model that's predicting volatility, and it could predict volatility with incredible accuracy. But what do you do when you get that excess volatility prediction? Do you speed up or do you slow down? How much do you speed up and how much do you slow down? That's going to depend on your trading strategy. It's going to depend on the market, on the characteristics of the stock. So we include metrics that can capture all of that and visualize it to the traders who spend all day, every day looking at this performance. These metrics allow us to evaluate the model and evaluate the integration of it, which then allows us more ideas about how to improve, and the circle continues on. So what's next? I promised I'd talk about Gen AI, and I know it's the topic of pretty much every technology conference that we go to. But what excites me about Gen AI is its ability to offer information to people who are not technical. So historically, we designed solutions because we had to predict what we thought people were going to want and what questions people were going to have of the data. What Gen AI allows us to do is to open that up so that people who don't have Python experience or don't have Q experience can access the information that's contained in our analytics database without that. So we built this little video, which is a natural language layer on top of our KDB Analytics platform. So we've just got a simple chat box where you can put in your questions, and you can see that I'm just typing here in English. If you can't see that, it says, show me the US dollar value traded and the performance versus arrival of all orders in July 2024 and summarized by venue. So we're sending that question off to OpenAI's Gorilla AI, sitting on a server in Berkeley. And with it, we're sending a description of our structured analytics framework. We're not exposing any code. We're not exposing any data. It's just a description of how we structure access to data. So the Gorilla AI returns a Python call, which we're then using PyKX to query our KDB Analytics platform and get an answer. So that anybody, even if they don't have Python access, can now interact with the data and interrogate the data and ask questions of the data and improve their understanding of the performance of trading.